In this video, I'll discuss a newly introduced Section 74A in the CGST Act 2017. Before discussing this 74A, just have a comparison between the existing provisions and the new provision. Existing scenario is that there are two sections. In existing scenario, there are two sections, Section 73 and Section 74. 73 deals with unintentional mistakes, 74 deals with intentional mistakes. Now both intentional and unintentional mistakes both are clubbed under one section, that is Section 74A. Right. So there are primarily two differences between 73 and 74. Unintentional misstatements, lesser time to adjudicate. Intentional misstatements, more time to adjudicate. That is the first difference. The difference between intentional misstatements and unintentional misstatements. There are two differences. One is unintentional misstatements has lesser time for adjudicating. Intentional misstatements has more time to adjudicate. Coming to the penalties, second difference is the penalties. Unintentional misstatements will have lesser penalties. Intentional misstatements will have more penalties. And third difference is that unintentional misstatements, there can be complete waiver of penalties. In case of intentional misstatements, no waiver of penalties, only concession in penalty. Okay. because because of more time to adjudicate, tax authorities are biased towards issuing notices under Section 74. If they miss the deadline of 73, or if they are of the opinion that 74 is having more time to adjudicate, tax authorities are keep on issuing notices under Section 74 without verifying the underlying facts. Tax authorities are heavily issuing notices under Section 74 because they will be having more time to adjudicate. Now the government has solved that problem. Okay, by keeping the same time for both. Now the government has solved the problem by keeping the same time for both. Therefore, now there is no incentive for the tax authorities to issue notices only under intentional cases, because because the time limit is same. But part of the problem still remains. What is the problem remains is that penalties. Even though the time limit is same, with an intention to get more revenue, tax authorities may be prompted to issue notices as intentional mistakes because they will get more penalty. And there is no complete waiver of penalty, only concession in penalty. In case of unintentional cases, there is complete waiver of penalty. Okay. Therefore, part of the problem is solved. Out of the two differences between intentional misstatements and unintentional misstatements, part of the problem is solved by keeping the same time limits to adjudicate. The remaining problem remaining to penalty still persists. Now, it doesn't mean that we are not asking the government to keep the same penalties. It is not appropriate also. We cannot expect the government to keep the same penalties for both intentional misstatements and unintentional misstatements. We cannot expect them. Yes, there should be a difference. Unintentional misstatements, penalty should be less. Intentional misstatements, penalty should be more. Yes, the difference should be there. If there is a difference, proper office tax authorities are issuing notices as if it is an intentional misstatement. Then how to resolve this problem? It is very simple. Government should come out with clear guidelines regarding what they stands for: fraud, willful misstatement, or suppression. Three words are used. In 74A, three words are used. For that matter, even in 74 also, three words are used. What are the three words they have used is fraud, willful misstatement, and suppression. They have used three words. In Section 74A, they have used three words: fraud, willful misstatement, suppression of facts. they have used three words, but they have given the definition only for one word. Only suppression they have defined. Only suppression they have defined. They have not defined what is fraud. They have not defined what is willful misstatement. If the government can give clear guidelines regarding what is fraud, what is willful misstatement, then the tax authorities will verify the relevant facts. Then they will issue a notice. Now, without verifying the relevant facts, they are issuing notices saying that it is an intentional misstatement because they will get more revenue. Okay, right. So therefore, what is suppression? Either not giving information in the return when you are filing returns, GSTR 3B, you are not giving required information, or when the information is asked by the proper officer, at least at that time you need to provide the information. If the information is not furnished, then they have asked, it is the suppression of facts. It is the biggest mistake which we have observed in most of our cases. Even though the client case is genuine, but the proper authorities are issuing as fraudulent cases because of the fraud, because of mistake from the client side. What is that mistake? Is that they are not responding to the notices within the time. The first primary thing to handle any legal case is responding within the time. Okay, if you are not able to submit the documents within the time, at least ask for some extension of time to produce the document. We need to give some reply within the specified time. Without reply within the specified time, they will consider it as a suppression of facts. Without reply within the specified time, they will consider it as a suppression of facts. Okay, right. Therefore, the problem is that, okay, the existing problem is that because of more time to adjudicate, tax authorities are prompted to issue notices under 74 saying that client mistake is intentional mistake. Now that problem is solved. Both intentional mistakes and unintentional mistakes, time limits are same. But the only difference is that penalties. Okay, right. Now, having completed that brief background, now we'll go to actual 74A, the present section 74A, applicable from financial year 24-25 onwards. 74A is applicable from financial year 24-25 onwards. There are three limbs here. There are three aspects covered in 74A. One is tax, another one is refund, another one is ITC, input tax credit. Another one is ITC. Either you paid less tax or you claimed more refund or you claimed more ITC. Either you paid less tax or claimed more refund or claimed more ITC. These three amounts together, I'm calling it as an amounts. Okay, for short, for simply, I'm calling it as amounts. Okay, so if the tax paid is less, or if you claim more refund, or if you avail more ITC, these three together is called as amounts. In addition to the amounts, you need to pay interest and you need to pay penalties. In addition to the three amounts, we need to pay interest and we need to pay penalty. In some cases, there will be a waiver of penalty. In some cases, there will be a concession in penalty. That we'll discuss later. Time limits. So time limits for issue of notice is 42 months from the due date for filing annual return. Look at the time limits. How much time is there for the tax authorities to open our case? Say financial year 24-25. Financial year 24-25 will end on 31st March 2025. Will end on 31st March 2025. Okay, right. Due date for annual return. Due date for annual return. Due date for annual return is 31st December 2025. Due date for issue of notice. Due date for issue of notice. Okay, so due date for issue of notice under section 74A, 42 months. 42 months means 3.5 years. Okay, so 25, 26, 27, 28. 3 years is completed. 26, 27, 28. 3 years is completed. 30th June 2029. 42 months. Okay, 42 months from the due date of annual return. 31st December is the due date of annual return. From there, 42 months, that is 30th June 2029, you have to give notice. Next, normal due date. Due date for issue of order under section 74A. Okay, due date for issue of order under section 74A. Due date for issue of order under section 74A, 12 months from the issue of notice. Within 12 months from the date of issue of notice, that is 30th June 2030. 30th June 2030, this is the due date. And extended due date. Extended due date for issue of order. Extended due date for issue of order under section 74A. Extended due date. Commissioner will extend the due date. Commissioner may extend the due date for another 6 months. Commissioner may extend the due date for another 6 months. That comes to 31st December 2030. Therefore, if your financial year completed on 31st March 2025, if the financial year completed on 31st March 2025, 31st March 2030 and 31st December 2030, almost 5.5 years time is there. After the end of the financial year, within next 5.5 years, there is a chance of issuing an order. Okay, authorities have more time. Now the government opinion is that since the authorities have more time to issue an order, don't hurry saying that it is a fraudulent cases. Verify the facts completely, verify the underlying facts completely, and then decide whether it is an intentional mistake or unintentional mistakes. Earlier, time limit is less. Now there is an abundant time limit. You have almost 5.5 years time to decide to issue an order. Therefore, now you can verify the relevant facts. You means proper authorities or tax authorities. They can verify the relevant facts and then decide whether it is an intentional mistake or unintentional mistake. So in total, effectively, after the end of the financial year, within 5.5 years, at any time you may get an order. Okay. Right. These are the time limits for issue of notice and time limits for issue of order. After issuing notice, proper officer has to consider the representations made by the registered person or taxpayer. After issue of notice, taxpayer will respond. They have to consider our representation. After considering our representation, they will compute the tax amount, interest and penalties, and they will issue an order. Consider the representation, determine the amount of tax, interest and penalty, then issue an order. Okay, right. So penalties, as we discussed, there is a waiver of penalty for unintentional mistakes. For unintentional mistakes, no element of fraud. There is no element of fraud. Unintentional mistakes. Okay, there is no element of fraud, unintentional mistakes. If the amount is paid along with interest is mandatory. Interest is mandatory. If the amount is paid along with interest before issue of notice or after issue of notice, but within 60 days of issue of notice, then there is a complete waiver of penalty. Okay, right. So if the self-assessed tax, there is no waiver of penalty for self-assessed tax. You yourself assess the tax, then what is the problem for you to pay in the tax? Okay, if the self-assessed tax is not paid within 30 days from the due date, if the self-assessed tax is not paid within 30 days from the due date, then penalty will be imposed. How much penalty? This thing. 10% of the tax or 10,000, whichever is higher. If the self-assessed tax is not paid within 30 days, say for example, for the month of January, okay, for the sales made during Jan 2025. For the sales made during Jan 2025, due date for payment of tax is 20th Feb 25. Next month, 20th Feb 25. Okay, you'll be having time to pay within 30 days. If the tax is not paid, within 20th March 2025, then penalty will be imposed. Okay, if the tax is not paid within 20th March 2025, then penalty will be imposed. Okay, so self-assessed tax you need to pay within 30 days, otherwise penalty. How much penalty? 10% of the tax amount or 10,000, whichever is higher. There is no element of fraud and the amounts referred above has not been paid within 60 days of issue of notice. Okay, within 60 days of issue of notice, amount tax not paid, then penalty will be imposed. Now look at the difference between this thing, unintentional and intentional. Unintentional. Okay, paid before interest. Tax and interest paid. Tax and interest paid before issue of notice. Tax and interest paid before issue of notice. Tax and interest paid before issue of notice. Intentional cases, no penalty. Intentional cases, no penalty. Okay. Unintentional cases, penalty, unintentional cases, no penalty if tax and interest paid before issue of notice. But in case of intentional cases, fraudulent cases, 15% of the tax due. Even though you pay the amount before issue of notice, still you have to pay the penalty, 15% of tax. Okay, right. 15% of tax due. Not total tax, tax due. Next, after issue of notice, within 60 days of issue of notice, within 60 days of issue of notice, here also no penalty, but here 25% of tax due. 25% of tax due. Okay, after within 60 days of issue of order, within 60 days of issue of order, within 60 days of issue of order, if you observe, there is no waiver for even unintentional cases also. Unintentional cases, waiver comes only when you pay the amount within 60 days of issue of notice. Okay, after issue of notice, but within 60 days of issue of order. Okay, then there is no waiver. Either you have to pay 10% of tax due. 10% of tax due will be penalty. So here 50% of tax due. 50% of tax due. Okay, more than 60 days after issue of order. Okay, then here also 10% of the tax due, here 100% of tax. Now you may ask, sir, in case of unintentional cases, whether I pay after 60 days or after 120 days, I am getting same penalty. No, sir. Then why the assessors will pay? Why the taxpayers will pay earlier? I remember what we are talking is penalties. Okay, penalties, these are the fixed amounts, but interest will change. Okay, if you prolong, in case of unintentional cases, since the penalty is same, even for intentional also, after 60 days, anytime you pay penalty is same. After 60 days, anytime, after 600 days or after 100 days or after 400 days, penalty will be same, but interest will increase. Therefore, don't look at only at the penalty, saying that, sir, after 60 days, whenever I pay the same penalty, no, I'll pay after 2 years or I'll pay after 3 years. Don't think like that, because penalty will be same irrespective of the timing of payment, but interest keeps changing. Okay, so interest will be calculated till the date of actual payment. So these are the penalties for intentional mistakes and unintentional mistakes. Next, these the three cases. One is proceedings shall not be initiated at all. Proceedings shall not be initiated at all. In the first case, unintentional cases, if the tax along with interest is paid before issue of notice, if the tax along with interest is paid before issue of notice, proceedings are completely waived. Proceedings are completely waived. The proper officer will not issue notice at all. If the registered person pay the amounts along with interest before the issue of notice under section 1, he may inform the proper officer about such payment, and thereafter proper officer shall not issue the notice. Proper officer shall not issue the notice. That means proceedings are completely dropped. Okay, so not only issuing of order, notice itself is not issued, because you are paying the tax before issue of notice. You are paying the tax before issue of notice, therefore notice itself is not issued. Okay, so paid before issue of notice, notice is not issued. But if you pay less amount than actually payable, then notice will be issued. Okay, if you pay full amount due before issue of notice, then proceedings will not be initiated at all. If you pay full amount before issue of notice, then proceedings will not be initiated at all. If the amount paid before issue of notice is less than the amount actually payable, amount paid is less than the amount actually payable, then you have to face the notices. Okay, you'll get notice and you'll get order also. Proceedings will be initiated. Proceedings will be initiated in case of any shortfall in payment. And material cases, that these proceedings are lengthy proceedings, you should not give for petty issues of 100 rupees or 200 rupees. Therefore, the cutoff limit is 1000. Less than 1000, no cases at all. Okay, right. This is proceedings shall not be initiated. So here initiated proceedings shall be deemed to be concluded. You have initiated the proceedings, but those are concluded. When those are concluded, either you pay the amount within 60 days of issue of notice or within 60 days of communication of order. If you pay the amount, here the amount is paid before issue of notice. Here the amount is paid before issue of notice. Here the amount is paid within 60 days of issue of notice or within 60 days of communication of order. Issue of notice, that means proceedings are already started. Proceedings are initiated. Issue of notice. Okay. Issue of notice means proceedings are already initiated. And since you paid the amount, so first proceedings are initiated. Second, the amounts are paid along with the interest and applicable penalty. Then the proceedings are concluded. First, the proceedings are initiated, then you paid the tax amount, interest and penalty, then proceedings are deemed to be concluded. 3 steps. First, step 1, proceedings are initiated. Step 2, you paid the tax, interest and applicable penalty. Then the third step is proceedings will be concluded. Right. Next, initiated proceedings can be extended. Initiated proceedings can be extended. You have issued a notice for one particular tax period. You have issued a notice for one particular tax period, say financial year 24-25. You have issued a notice. Same mistake you identified in another years also. Okay, grounds relied same. Same mistake you identified for another years also, for other periods, say financial year 25-26. You identified the same mistake. Whatever the mistake committed by the taxpayer in 24-25, he committed the same mistake again in 25-26. When you point out the same mistake, for other periods, again notice is not required, statement is sufficient. Simple computation statement of tax is enough. You don't need to give once again notice. Statement is enough. Okay, right. Provided the same mistake is committed. Statement deemed to be notice. Statement for one tax period is statement for one tax period. Okay, notice is given for one tax period. Notice is given for one tax period. Notice is given for one tax period. Okay, so same mistake committed in another tax period. Okay, statement is given for another tax period. Okay, such statement for another tax period is equal to, is deemed to be, is equal to notice for another tax period. Okay, statement for one tax period is equal to notice for another tax period. First, you have given notice for one tax period. Subsequently, same mistake is committed in another tax period also. Statement is given for another tax period. Such statement for another tax period is equal to notice for another tax period. Therefore, whatever the notice issued for 1 year, we are extending the proceedings for another years also. Proceedings are started for 1 year and the same proceedings are extended for other tax periods also. Okay, so 3 cases, proceedings are not initiated at all. Initiated proceedings are deemed to be concluded, or initiated proceedings are extended. Initiated proceedings are extended. Okay, right. Next. So if the proceedings are concluded against main taxable person, say for example firm or a company, if the proceedings are concluded against main taxable person, the proceedings are deemed to be concluded against another persons also, like in case of a partnership firm, partners, in case of a company, directors. If the proceedings against the company main taxable person is concluded, proceedings against the directors are also deemed to be concluded. If company is the main taxable person, if the proceedings against company are concluded, proceedings against director also deemed to be concluded. That is a logical case. If there is no case for the main person, obviously the incidental person also exempted. Okay. So that's all about 74A, newly inserted 74A in the CGST Act. Okay, so part of the problem is solved, part of the problem is still remaining. With an intention to get more revenue, you may get notices as intentional cases that you have to fight. No doubt, sir, I committed a mistake, but that is not intentional, unintentional misstatement that you have to fight it out. Okay, thank you.